Welcome back to the 60/40 cash flow series. We're now up to tip number 7, so you're halfway there, which means you can make it all the way to the end. What have you learned so far, or more importantly, what are you taking action on? Let us know in the comments, and if you haven't connected with us yet on either LinkedIn or Facebook, be sure to reach out to us because we'd love to hear how you're going. Are you finding that you're now focusing a little bit more on the cash flow in your business? Because that is the key, to have more cash today than you did yesterday. And if that's not happening, we need to find a way to help you get your cash flow back on track. My name is Cherie, and this tip is part of a series of 14 things that you can do to begin to take control of the cash flowing in and out of your business. And this is just the start. Over the past 15 years, working with my accounting firm clients, I've helped hundreds of small business owners to work less, earn more, and create a business that supports the lifestyle that they want. Is that what you're looking for? Because these tips are just the start of how we can help you do the same. So our tip number 7 is to look after your accounts receivable and invoicing. Accounts receivable represent people who owe you money. So speed in converting that promise to pay into actual cash is super important. You'd likely have already provided the service or goods already, and you've already paid out for the costs associated with getting that job done. So the faster that you can collect the money now owing to you, the better it is, because it also reduces the risk that you might not get paid at all. On the money meter, this directly affects your money in. On the impact scale, this is very high. In fact, it is an essential part of managing your cash conversion cycle. It will definitely pay to get this right because this cycle is a fundamental part to successfully managing your cash flow. On the easy to implement scale, this is fairly easy to implement, but there are a couple of areas that you might have some difficulty, and this is in setting up the system or process that you will use and in getting together the templates to get going. You have to make the decision though that you want to change things in order to get the results that you're actually looking for. So accounts receivable is actually a great one to brainstorm to see how you can make an improvement here. What if you can generate an improvement in your accounts receivable days by only 1 day? Don't think it would make much of a difference? You might be really surprised. What if you were able to improve it by 5 days? Now, accounts receivable might not apply to everyone, but as you can see, as we'll come to later, this ties in with creditors, inventory, and work in progress to form an overall part of your cash conversion cycle. Now, your cash conversion cycle is always talked about in the number of days. So while it might not seem like a lot now, or you operate in an optimized business model where you get payments up front, when taken into consideration for the whole of the cycle, it will have an impact. So here's the maths surrounding invoicing and collections. Letting the number of days that people owe you money blow out can cost you a lot. Just so that you can see the impact of what I'm talking about, let's just run with round numbers. So say your debtors are 40,000 and your annual credit sales are 400. Reducing your accounts receivable days from say just an average of 36.5 days down to 14 days on this 40,000 that you would otherwise be owed actually results in an immediate cash impact of just shy of 25,000. And that means that in your future, you're only carrying around 15,000 in debtors. I mean, a $25,000 turnaround on only $40,000 in receivables? Now, wouldn't that money be better in your pocket? What will it take for you to be tougher on the people that owe you money? Not sure how we did this and want to know how to calculate your own average receivable days? Check out our site at 6040.io/cashflow and get free access to the calculator and worksheet so you can see what sort of a change this could be for you. So here's the YouTube extra content which will cover the 3 things that you can do around accounts receivable and invoicing. The first thing you can do is to invoice early and invoice often. This is self-explanatory and the point is to make sure that your invoices go out as quickly as possible after the delivery of the service. Ideally, you'd structure your billing arrangements to get paid upfront or at least partially upfront. The reason for this is to bring forward your cash collections as close as possible to the point where you had to pay out the expenses relating to the project. This shortens your cash collection cycle. I'm sure that you didn't start your business to become someone else's bank, and it might even be that you bill once a month. You instead bill each 2 weeks. Or you could shorten the terms of your payments from 30 days after invoice to either 14 days, or even better, it's due on delivery. The second thing you can do is to have a dedicated debtors champion in your business. This role is to be assigned to a designated person who is ultimately responsible for all of the debtors matters with your business. This is really easy to implement. Just look at the functional role requirement and identify who you will assign to take on these tasks. The third thing you can do is to set up an automated reminder on all of your invoices in your accounting software. This is something that can be done in under 5 minutes and will have a positive impact upon your collections process. We do have a quick how-to video about this on the channel where we'll show you how to set up this using Xero and QuickBooks, so be sure to check that out. Using automated reminders are super handy because they go out on a time frame that you decide with no humans involved. No one having to remember to go into the software to do it. No I forgot, no I'm busy, no public holidays. It just happens. So for the few remaining clients that I do still on a do and charge basis, I have my auto reminders set at -1 day, just as a prompt that their invoice is due tomorrow. The next is set at +7 days, and the last is set at +14 if they still haven't paid. If further action is necessary, we then use a different process altogether after that. Thanks for watching this tip in our 60/40 cash flow series. We've got more to come, so you can keep an eye out from these as they're released on our social channels, or you can sign up for our email list where you'll get a fast pass to access these tips and more. So just go to 6040.io/cashflow and you can get access straight away. Have an amazing rest of the day.